Interested in real estate? How about wealth? Well, they go hand in hand. And here, you'll learn all about it. Welcome to Be the Bank, a podcast where we discuss and debate the topics centered around real estate investing. Your host, Justin Bogard, shares insights into investing in real estate to create real wealth and passive income for you and your family. He'll share stories of real estate investments done right, walk you through the process of owning a real estate note, and most importantly, educate you so you can be the bank. This is Be the Bank, brought to you by American Note Buyers. Now, here's your host, Justin Bogard.
Hey, listener, it's Justin Bogard here, and welcome to another episode of the Be the Bank, number 24 this season, on season number 5. Man, we only got a couple episodes left to end the season. Woohoo! Today, I got a special guest. His name is Brian Force. You guys are going to love this guy. He's got a ton of energy. He's younger than me, and he knows quite a bit about real estate, so you ought to listen to him when he talks. And we're going to be bringing up the fact about kind of sketchy people in our business and just kind of watching out for the bad actors. So you're going to love this episode, so stay tuned. Brian, what's happening, buddy?
What's up, brother? How are you?
Doing very well. It is deciding whether it's going to cool down or heat up here in Indiana. So our weather is typically around this time, probably about 20 degrees in the morning, up to about 50, mid 50s in the afternoon. And right now it's still hovering in the mid 60s to even almost 70s for a few days here. So I'm afraid that the frost is going to come in and just, nip us.
I was going to say, is this maybe like, I got to look on my phone here. Is this maybe the first time that where I'm at is like colder than when you're at? We're at 65 right now. This is pretty normal for Texas in November, though. We might get up to 100 a few more times this year. Who knows?
Sucks to be you, man.
Oh man. Well, you can still go play golf in December here, so that's not a bad thing.
Man, I love playing golf. If I could play golf every day, I would.
Yeah, man.
I really would.
It's charity tournament season around here because it's a little cheaper to play right now. So I've been playing the charity tournaments, it seems like, every week.
That's awesome. So what do you play like on down there? Do they have links courses or is it wooded courses or?
Oh man, we've got a little bit of it. North Texas area is kind of a mecca for golf. So we've got they'll pull out all the stops. So we have like a really great links course called the Tribute, which is a very kind of like nationally renowned links course around here, all the way up to I live right down the road from the new PGA resort. Which I've not had the pleasure of playing yet, but it's incredible from what I hear. So I mean, we got every flavor and delicacy of golf course around here you could possibly imagine, man. It's pretty awesome.
I would love to lose all my golf balls down there. That sounds like a lot of fun.
Yeah. And don't I know it?
18 holes, 18 golf balls gone. It's an expensive sport, but we keep coming back for more because we're a glutton for punishment.
Exactly, brother.
All right. So for the listening and viewing audience here, well, actually the listening audience, if you didn't know, if we have a YouTube channel, American Note Buyers YouTube channel, you can come over and check us out and you can see the video feed of today's episode. And so Brian and I don't know each other for a very long time, but we do know each other. And our commonality factor is actually his father. And so his father is heavily in the note business right now. And he actually has a mentor, Eddie Speed, who's my mentor as well. And so that's kind of how we met. And so Brian and I met because his dad, Tom, brought him to a mastermind that I was at with my business partner, Richard, who's usually on the show, but we kicked him off today just because, he got in trouble with HR. So he's just not allowed to be on today. So that's his punishment. But yeah, so Brian and I got to meet at the mastermind. We kind of hit it off. I kind of know a little bit about his story, which he's going to share today. And we're going to get into some fun topics. But Brian, why don't you go ahead and just kind of set the table here with as far as what have you been doing in real estate so far? And I definitely want to plug your podcast because I want to make sure people are going to subscribe to your podcast.
Sure. Absolutely. Thanks, man. It's fun to be on this side of things for the first time in a while. I'm usually
Instead
the
of
one
hosting, you're guesting, right?
Yeah, exactly. It's a totally different flavor. So my name is Brian Force. I've been in real estate for about 13 years now. I guess if you count being a licensed real estate professional, I've been wholesaling and stuff since I was about 19 years old. So maybe more like, 16, 17 years. I currently run a real estate sales team with Keller Williams. That's the Livy and DFW team. We're
Okay.
blessed enough to do about 350 home sales last year. I run Homeward
Nice.
Property Management, which we co-founded a couple of years ago. We manage about 400 residential doors across North Texas now, and run a multi-family syndication company called Deep Blue Capital. We did our first acquisition earlier this year. That market, we're trying to acquire more and more right now, but the multifamily space is very interesting right now.
Yeah.
So naturally, I've spread myself pretty thin in my real estate endeavors, and then I also co-host two podcasts. One is the only real estate podcast worth listening to. We've been doing that for about 6 years. We're very fortunate to be one of Inman News's top 25 real estate podcasts in 2022.
Yay.
Yeah, and even though that one's called the only one worth listening to, I do another one. That's our multifamily podcast called
Yeah.
the More Doors Podcast. We just started that one earlier this year. It's been phenomenal. I've
Okay.
met so many amazing people and operators and investors through that podcast. It's been very, very, very cool. So that's a little bit about me. I'm perpetually exhausted from all the things I get myself into, but I absolutely love it.
Gonna say I hadn't listened to the other podcast you mentioned about the multifamily syndication. Well, one, obviously I'm in the note business, so I'm not really
Sure.
looking at multifamily stuff that often. But the name was too short. When you have
Exactly.
the only real estate investing concepts you'll ever listen to, it seems like a very long name. And so I figured, you got to listen to it if you have to read a paragraph to describe the name of the podcast.
We have made a name for ourselves doing, I think, everything the exact opposite of what a
Yeah.
successful podcast should do. We made the name way too long. We do it live and we never edit it. We barely market it, to be honest with you. It just
Yeah.
we have a good network of people that we're blessed enough that they share it out, and it's grown. It's gained a major following, and
Yeah,
I
it
don't
has.
think that we're definitely not starting an online course on how to be professional podcasters anytime soon. I think we're very lucky to have had the success that we've had, because I think we've done everything wrong that they tell you to do to grow a podcast. Somehow it works.
Well, it's a really cool podcast. It's you guys done a great job with it. Your two co-hosts, they do a great job as well. So it's really fun. I
Yeah.
really encourage you guys to check it out. Both podcasts, obviously, but the main one I listened to it, and I also saw it on Facebook Live the other day too when it just popped up. Just because we're friends on Facebook, so that's how I saw it was live.
Sure.
It's really cool how you got the setup. You got different camera positions going. You got a great video person on demand, and the post production of it as well. So it's really cool.
You know what I think is really, and we'll, I won't dwell on this too long, but I've always said that the podcast that we do is a very good visual metaphor for just the growth of any type of venture or business or whatever. If you look at, I'm actually sitting in our studio today, but I'm not hooked into our normal equipment, so I might sound a little different. We've got a very, very, very professional setup now, which is awesome. We sound good. We have an engineer that runs the whole show. It's fantastic. We actually we run the studio as a separate company now, Tour Studios. Tour, Tore, the only real estate, that's kind of our brand now. Tour Studios produces several podcasts now, so we actually have monetized that aspect of it. But it started with me and my co-hosts and a free Zoom account, and that was it. 6
Isn't that
years
amazing?
ago, we had no idea what we were doing. If you go back and watch the old stuff, the only thing that we did right was put it on our calendars for Wednesday at 3 p.m. and never
Yep.
miss it. And
Yeah.
I think that that's such a testament to what just commitment over the long term can do for you in any venture, because we had no idea this thing would get as big as it has. But we didn't care. 3 p.m. on Wednesday, we were always there to do it. I think if you take that ideology into any business venture, it's
Yeah.
going to be really difficult not to be successful if you're just consistent.
It looks like you guys have a lot of fun too, and that's what I think is
Oh,
important about podcasting. It's about having fun
100%.
and just having that discussion, debate.
Yeah, exactly. It's a blast, man. That makes it way easy to keep coming back.
It's awesome. Well, hey man, today there's a subject matter that I kind of want to get into, and typically what I do with Richard and I, we have something that happens to one of us during the week or the previous week, and we just kind of bring it up and talk about it. And it's kind of cool to be a fly on the wall. You, listener here, are going to get to hear us go back and forth on just a subject matter that we either may both agree on, maybe lightly agree on, maybe we disagree on. And so it's just kind of fun to go back and forth. And so what I see lately, and when I say lately, this is going to be a loose timeline here, probably about a year, is when this economy kind of struggles in real estate, from my point of view. Obviously, I'm the note investor guy here. I'm seeing a lot of people present me deals. I'm seeing them present me deals with like overinflation of the actual real property value. I think a lot of people got really excited during COVID and they saw appreciation just shoot through the roof. And I am looking at a deal regardless of what the unpaid balance is before I buy this note, but I also want to know the property value is. And if I notice that the property value is severely overinflated from what the note value is, it's kind of a red flag to me. I think sometimes they oversell this thing. So I just want to kind of start this conversation, set the table of like, we'll call this the poser mentality when it comes to setting a wholesale price. Like I know when I got ingrained into real estate investing, the first thing they said is like, don't trust a wholesaler's value. Don't regardless of who they are, you need to do your own valuation on it and get an idea. Don't trust their numbers. You need to run your numbers. And so that definitely holds true in what I'm doing today.
Yeah, 100%, man. And you see it in the note business. I think one of the most visual, good metaphors that a lot of investors would resonate with is maybe like the single family wholesale business, right? Just because that's for the longest time. And so I used to flip several houses a year. I don't as much anymore just because the market got really tight the last few years. It was uber competitive, and whenever things are continuously trending north like they were up until middle of 2022, it can be difficult to compete, and I only have so much time in the day. So what I noticed is that most wholesale deals, I mean, they didn't even make it to my inbox before somebody was buying them. Now I'm getting 20 or 30 a week. But as you said, the numbers, knowing what I know about the North Texas real estate market and having done this for a living for so long, I can identify what an ARV is going to be before I even pull up the MLS to verify comps. And they're just not really even close. And as a wholesaler, it's or as any sales professional, let's say, it's a very human thing to give into that urge to really try to make a case for the maximum value of an asset. And so you'll see some of these supporting documents or CMAs or things like that have comps that are nowhere near the most relevant, probably way too old to be considered the best comparables. And you just see wholesalers making a case for a value that as a professional I know is absolutely inflated from where today's market's at. So one, it's obviously why you are tasked with being a consummate professional on your end, having a mechanism to run your own numbers and do your own. That's why they call it due diligence. It is your job to verify those things. I think it's a responsibility, and I would encourage anybody that's, looking at, whether it is notes, multifamily, single family, whatever your intentions are. We'll take the flipping business, for example. I'm making offers on stuff because I'm getting so many more deals in my inbox right now that aren't even close to what the wholesaler is asking for it, right? And I have no shame or doubt in that. I'm not going to get as many deals if I was just going with what they were asking. But I actually believe this to my core. I believe that buyers that can close, savvy investors that have an education and know what they're doing and have a track record and have experience, we actually have a responsibility to drive the market with our activity. Meaning, if I talk about this a little bit on the multifamily side, where we're not able to get deals to pencil. So sometimes, my partners won't even want to put an LOI in. I say, no, we got to put an LOI in, because if we put an LOI in and every other person, every other group that's underwriting and penciling this deal at the same number that we are puts an LOI in, well, what do you think that seller is going to feel whenever they get 15 LOIs that are a heck of a lot more realistic in what their whisper price is, right? Are they going to be obstinate, or are they going to come around and start to have a realistic conversation with the broker around the state of the market, what their dispo strategy is, and whether or not it makes sense to stick to their whisper price or to come down? But if we don't get in the game never moves. There's no momentum in any direction. And so in these types of, when the market shifts really quickly, you're going to have a lot of times an end user there who is, dispoing an asset, whether they're selling a note, they're selling a multifamily asset, they're selling a single family house. Like, they're going to have a different perspective for a while on what asset values look like than what the buyers on the other side are going to want to pay. The bid ask spread is going to open up pretty wide when you have a quickly shifting market like we saw really beginning in the middle of 2020 or 2022. I'm sorry. And so in the middle there's going to be people that there's always going to be some bad actors for sure, like you said before. There's also going to be a lot of people, if you look especially on the single family wholesale side, just people that aren't having strong conversations, just wholesalers that are just
Yep.
they're making promises to to a seller or a homeowner that there's just not a chance in heck they're going to be able to keep, because they want that dopamine hit of getting a deal under contract, and
Yeah.
they usually have no skin in the game
Yeah,
whatsoever. So
exactly.
they're like, I'll figure it out on the other side. And, if I'm playing with house money because I've got a dollar option period and no earnest money, if I'm not having a strong conversation, I might tell the seller whatever they want to hear just to get that under contract. And what really frustrates me on that side
Yep.
is the bad actors that we talk about. Those would be the ones that are purposely tying up a property
Yeah.
for an extended period of time with the intention that they're going to retrade the seller down, at a later date,
Yep.
right? I've got a 10 or 15-day option period to go get this contract assigned. I know I'm not getting it assigned for the price that I'm trying to what I'm promising the seller. So I know I'm coming back in 5 days and trying to retrade them. And that's the stuff I can't stand.
So the wholesaler has the wrong type of motivational problems. They don't really have cash flow. They have transactional flow, and that really affects them in this down market
Yes.
because they're so competitive right now. They're stepping over each other, and I think fortunately a lot of them will kind of weed themselves out. The ones that aren't, that are more what do you want to say, fly by the night or
Yeah.
side habit, a side hustle type of wholesaler.
Sure.
Those guys are going to go by the wayside anyways. But it is difficult because I notice everyone has the sense of urgency. I'm doing the air quotes here for those of you that can't see me right now. And the sense of urgency is I hate doing that because I back up and I say, wait a minute. I'm not funding this thing tomorrow, just so you know.
Mhm.
I'm going to need a few days and I'm going to have to underwrite this a different way.
Yep.
I got a deal, what was it, 4 days ago? I believe it was on Friday, right before the weekend. The deal, the investor says, hey, look, I've got a seller finance transaction that I'm doing. And this property I sold for $90,000. I got like $10,000 down, whatever the terms were, maybe 15 years or so. So it's like $780 payment a month. Okay, great. That all sounds good. You start digging into, okay, what's the BPO value? When's the last time you got a valuation on it? Okay, here it is. As is value, 55K.
Oh man. Wow. Almost like
55K.
barely half.
I was like, hey, is this real here? Oh yeah, but the future value of it is after ARV is going to be
Yeah.
100 or 150. I'm like, yeah, those are great comps, but as a lender, why would I assume that they're going to actually fix it up?
Yeah.
What's their motivation there? Do they have more money to put down? Like, these are the things that I try to coach some of the seller financiers out there that are just trying to do this and over pad the numbers. Cause yes, I do say this out loud and I'll stand by it. You're providing a premium service by providing premium financing. So yes, you can charge a little bit more and yes, you can sell a little bit higher, but you can't double it.
You
You know?
can't double it. You can't double it. And I
So
think that's yeah, and to come back and talk about ARV and things like that. Well, I mean, you can use that as an acquisition strategy. You're hoping that you never have to take that property back in the first place, but
if you're
especially if it's not
if you're the borrower, that's okay to have an ARV
right.
strategy. But when you're the lender, that's not the value you're looking at.
Exactly. That's not your strategy at all. You're not going to want to go and actually do the renovations and get it up to market value and all
Yeah.
that,
Not
taking
this
on a whole
guy.
different job.
I've lost plenty of money trying to do that. I am not the expert in that at all.
Exactly.
Yeah.
So I mean, it's definitely an interesting time, because I think we're seeing that same ideology in
Yeah.
several aspects of the marketplace in several different industries. I am curious. I think we're all waiting on bated breath to see what happens Q1, Q2 of 2024 with rates, things like that, and how that affects the characters and the players inside the marketplace. I agree with you.
Yeah.
I think it is only a matter of time, and I think it's already happening. It's only a matter of time before the undedicated or unskilled in any aspect of the industry, they just aren't able to continue with their business model, if you even call it a business model.
Yeah.
When market volatility is so prominent, then expertise is what gets you to where you're trying to go and what helps you thrive in that market. So I do think you're going to see this temporary massive bid ask in a lot of different areas, or just these crazy terms, or these ideological definitions around value. I think you'll start to see those smooth themselves out over the next 12 to 18 months.
Yeah, I was trying to think of the word earlier, and I finally came to my mind. Hobbyist is what I was thinking of.
Sure.
The
Yeah.
hobbyist wholesaler.
Yeah. Oh man, you have that in every industry. You've got the hobbyist wholesaler up until earlier this year for pandemic all through 2022. You had a lot of hobbyist real
Yeah.
estate agents that were crushing it as well, and it's very difficult as a hobbyist to really grow your business or
Yeah.
even to maintain it in periods like this.
So I saw a quote earlier today just by happenstance, and it said, and I don't have any validity that this is actually true, but I do believe it's true because the number makes sense to me, that it says like 95% of real estate investors fail.
Mm,
And maybe that sounds steep, but I kind of believe it because I've been in some of these seminar classes. Because believe it or not, I used to be a seminar junkie with this stuff till I finally took action. And
sure.
a lot of these people are just paying this absorbent amount of money to learn the skill and the craft, and then they go out and they really don't do anything with it. And so
I would.
I can see these hobbyists now that are trying to get into this end up fading away because they realize, guess what? This is work. this It's not really passive when you're an active real estate investor. I mean, I hate to
Well,
break the news for you, but
that's what I was going to ask, is what the definition there in that number of failure is, because lack of action to me is really
yeah,
the only failure, right? And I would
yep,
definitely agree with that number. You can be a real estate investor and not make money on every deal. You can lose money on a deal and still
yep,
not really fail. If you're learning what not to do, then you're actually succeeding long term. So I mean, as a former seminar junkie, still a mastermind junkie
yeah,
myself as well. I sit in a lot of rooms with a lot of people that are looking to learn. What they're really looking to learn is, what is the way for me to make really great money as a real estate investor while taking almost no risk and not really working my butt off, you know, like this is a business, like this is a real job. Um, Professional seminar goers or learners, they are there in droves in the real estate industry in all aspects. I think that's a fair number. I think that
yeah.
95% of people just fail to take massive action, because it's scary. But I'm a lot more scared of looking back on my life and realizing that I never did the things that I wanted to do.
To put that into perspective, just two things while you were talking, I just jogged my memory. It's like two things that can outbeat that pace are being a Chick-fil-A owner and and being in the restaurant business.
Oh yeah, I can
Just
only
barely, though.
imagine.
Just barely.
I can only imagine. Yeah, absolutely. I have a pretty high risk tolerance.
Yeah.
Being in the restaurant industry is probably higher than I'm willing to go. Just man, I was a bartender all through college. I put myself through school, and I kind of understand how the back end works. And man, I love being a patron. I don't know that I could be on the ownership side in the restaurant business.
All right, Brian. I'm going to give you a chance to do a one word thing here, just because I've been thinking about this all day,
Love it.
and because I have nothing else to do but think about this stuff. So, given the real estate economy that we're in right now, given the difficult situation of going through the end of 19, early 20, 21, 22, and now 23, and looking forward, what is one word that would describe how a real estate investor should be, just in today's environment versus the long stretch of probably, let's say, 13 to 18, where it was there was just one rule. It was buy it cheap.
Mm. Opportunistic, I think.
Okay.
Um, Opportunities are going to be there. Absolutely. They already are. I don't think that they will be for the next couple of years. I don't think that they will be as straightforward as they probably were in the time that you're talking about,
Yeah.
13 to 18, where you're looking at basically, if you're looking for rental properties, 1% deal, lock it up all day. You're going to need to be an opportunist, and I think that comes in many different forms. Either you're going to real estate investors now, it's more important than ever to treat your business and work your business like a business, meaning you we're seeing this on the multifamily side. We're putting out LOIs that those deals are getting locked up with a buyer that went higher and falling out 6 weeks later, going with another buyer who is still higher than us, falling out 6 more weeks later, right? So we've got to be on top of our game with our follow up. You're building a database on the multifamily side, especially of assets that you are looking to acquire, and that might happen. That could happen 12 months after you originally
Yeah.
toured and put an LOI in, just because it just the buyers weren't able to close, weren't able to raise the capital, something got in the way, they tried to retrade them, it fell out. Seller decided not to sell, then the seller, couldn't afford their rate cap renewal premium, so they had to sell. Like, there's a story behind every asset, and if you're not organized, you're not on top of things, you're not going to be able to take advantage of as many opportunities. The same thing if you are a flipper right now. We were talking about the wholesale side before. Those deals are falling out like crazy. People are
Yeah.
locking up wholesale deals. They're falling right back out. By the way, those wholesalers, they're not able to close on most of their deals. So if you're creating a database of addresses that wholesalers have sent you and they're falling out 10 days later, you should be in the car knocking on every single one of those doors, going direct to seller and saying, hey, I can make you a real offer and actually close in 7 days.
Yeah.
But you've got to be way more organized, because the deals might feel a little bit more plentiful, but the bid ask spread is so wide right now that you're probably not locking up dynamite home run deals just in your inbox like that. You've got to build a database. You've got to be following up, and you've got to be ready to go when that right deal comes along. Have your contract, if you're a flipper, contractors, financing, everything good to go, lined up. If multifamily is a whole different animal, but
Yeah.
in general, opportunistic is the word. You can't accidentally succeed as an investor in this environment. The opportunities are there, but you need to be an opportunist.
I love how you articulated all that. That was a great way that you explained it, because you're exactly right. During certain periods of certain periods of real estate times here, you could go get your real estate license and fall into selling a few houses and make a bunch of money. And you could be a mortgage loan officer, and you could have everybody and their brother wanting to refi because the rates were below 3% and everyone had super appreciation and tappable equity in their homes. And it was easy to be a loan officer. Now, where are those guys at?
I
Now, where are
know
those real estate
mortgage
agents?
lenders that were making $750,000 a year that might not be in the mortgage business next year, and that's not to say they're not phenomenal people, but
Right.
there's really great markets for certain industries at
Yeah.
times, and then there are times where the opportunity is there, but you've got to change your approach and your
Yes.
mindset and the way you go about it.
Yeah, you said it exactly. It's the word that I have been trying to think of all day is malleable.
Hmm.
And so being malleable in this business and any real estate business in general, the word pivot was used a lot in 2021, 2020. Um, but I say malleable, and because I always have to be creative. You're a very creative person as well. And you may not say that out loud, but I believe you to be a very creative person because you have different strategies and you know how to navigate and you know how to make money. You smell out being an entrepreneur and you execute on that.
Sure.
So, and I think that's the only way you can be right now and survive. And I think that's I think it's what normal is. I haven't been in this real estate business too long. I started in 2016, 2015-ish, into 15. So I haven't seen all the ups and downs, but listening to my mentors and hearing other people talk about that's been in a lot longer than I have, it's like you definitely, opportunistic is a great word. And I would also say malleable is another word that I would use to describe yourself, that you have to be willing to bend and flex and move and be creative and, pivot, as they used to say. So
100%. And I think it's just, it comes down to, this is true in many forms of life. It comes down to a willingness to face the objective reality of what is happening, and
yeah,
then take action around it. And Eddie Speed, I think, is a great example of this. So you speak to him
yeah.
about the note business. You know, he sees a shift in the note business coming a million miles away.
Oh
Right.
yeah.
Right.
Years before it
Years,
happens.
years, right? And he is a secular individual in that regard. He is the Michael Jordan of the note industry.
Yeah.
But he's also, he doesn't keep those things to himself. He will be the first one preaching
Yeah.
about any sort of volatility or opportunity or shift in the market. And we do that in, let's just say, the single family real estate business, the sales business. You can see a shift coming from a mile away when the Fed
Yeah.
starts hiking rates.
Oh yeah.
You know that things are going to shift, but it's one thing to just talk about it, and we almost get embittered about it. Like, we get annoyed that things aren't the way that they used to be. Like, things should always be the same all the time, which is never going to be the case. If you look at the residential sales business, home prices nationwide have increased like 40% or something like that, I believe, since 2020.
Yeah.
I mean, it's ridiculous. If that trend continued, every home would be worth $500 million in the next 15
Yeah,
years, right?
right.
It obviously can't stay the same like that for that long. But when we see things coming, there's a little bit of a delay between us seeing a market shift and then us actually feeling the tangible effects. So we oftentimes talk about what's to come and then take no action to prepare ourselves or
Yeah.
educate ourselves or look at what we need to be doing to thrive in that new environment. And then all of a sudden, this very slow moving train that we saw coming from a mile away gets right up next to our face, and we're still standing on the tracks. It's like, guys,
Right.
if you saw it coming from that long, be malleable. You've got to learn the next
Yeah,
strategy. You've got to learn to adapt. And I think that's what people like Eddie Speed do very, very well.
absolutely. Brian, thank you so much for being on the podcast today. We really appreciate your insights. I hope to have you on again because I'd love to continue this conversation and dive into some other subject matter with you because I think you have a lot of expertise that you can bring to the audience to definitely give it a different point of view that not a lot of us think of. So I really appreciate that. And again, man, thanks for being on. And I appreciate all the hard work you guys do in your podcast. It's really good. One more time, go ahead and plug in both your podcasts there.
Yeah, likewise, brother. Thanks for having me on. You can find us the only real estate podcast worth listening to. Literally, just Google that; you'll find it everywhere. It's pretty easy to find.
Yeah.
And the More Doors podcast. Check both of those out if you're looking to talk single family or multifamily, whatever. We kind of cruise around all those. So thank you so much for having me on, brother. I look forward to doing it again soon.
All right, man. Don't forget to check us out, listener, on our YouTube channel, American Note Buyers YouTube channel. This is episode number 24 of season 5. I'm Justin Bogard, my guest here, Brian Force, and we'll catch you guys in the next episode. See you later.
Thanks for listening to Be the Bank. We hope you learned something from today's show. If you enjoyed this episode, please rate and review us. Plus, check out our channel on YouTube and follow us on Facebook and Twitter at Be the Bank and on Instagram at Be the Bank Podcast. Be the Bank is sponsored by American Note Buyers. Thanks again for listening.